Our group members consist of Nurul Hidayah Asyikir binti Al-Asam, Fira Nurhanini binti Yahya, Emilia Farizina binti Muhammad Kabut, and Ainin Zulaika binti Zazali.
Background Takaful derived from an Arabic word which means joint guarantee, whereby a group of participants agree to jointly guarantee among themselves against the defined loss. The Takaful business arose in Malaysia in the early 1980s in response to the Muslim public need for a Sharia-compliant alternative to traditional insurance, as well as to supplement the operation of the Islamic Bank, which had been formed in 1983. It was in part by a ruling issued by the Malaysian National Fatwa Committee, which determined that life insurance in its current form is void owing to the existence of Qara uncertainty, riba usury, and MSIG gambling aspect. Takaful operation in Malaysia. Participants contribute a sum of money into a common fund which will be used to mutually assist the members against a defined loss or damage. The fund is managed by a Takaful operator who conducts the activity commercially as a profit-making interview. Sources of income for the operator are from profit from the investment of its shareholders fund, agency or wakalah fee, share or investment profit of Takaful fund, or surplus of the Takaful fund. The framework phase 1984-2022, phase 1 1984-2092 started with the enactment of dedicated regulatory law, the Takaful Act 1984, and the establishment of the first Takaful operator in 1984. The primary focus during this period was the establishment of the basic infrastructure for the industry. This act, which is still in use, is enacted to govern the conduct of Takaful business and require the registration of Takaful operator. It also provides for the establishment of Sharia committee to ensure that the business operation of a Takaful operator are in compliance with Sharia principle at all times. Next is phase 2, 1993-2000. With the advent of another Takaful operator and a new age of rivalry began, the foundation of the Asian Takaful Group in 1995 and the establishment of Asian Takaful International Ltd in 1997 marked a time increased collaboration among Takaful operators in this area. This has made it easier for Takaful operators in Malaysia and the area, especially Brunei, Indonesia and Singapore, to form Takaful insurance agreements. Phase 3, 2001-2010 began with the introduction of the Financial Sector Master Plan FSMP in 2001, which among other objectives is to enhance the capacity of the Takaful operators and strengthen the legal, Sharia and regulatory framework. This section of the PSMP, which related to Islamic banking and Takaful, is a roadmap towards realizing the aspiration of Malaysia becoming an international center for Islamic finance. This period has so far witnessed an increased pace of development and competition with the license of 3 new operators to further promote development of the Takaful industry. The Malaysian Takaful Association (MTA) and Association for Takaful Operators was established in 2002. The MTA aspired to improve industry self-regulation through uniformity in market practice and in promoting higher level of cooperation among the players in developing the industry.
Next is history and background of the company. Leong MSIG Takaful Berhad is a licensed Takaful provider and an important part of the Islamic financial services offered by Leong Financial Group. Leong Financial Group Berhad, the financial services branch of Leong Group Malaysia, and a significant provider of financial services through its subsidiaries and affiliated firms, owns 100% of Leong Holdings. Their subsidiaries provide a wide range of financial services in Malaysia, Singapore, China, Hong Kong and Vietnam, including banking, treasury, insurance, fund management, investment banking, capital markets and stock broking. They will combine its general insurance company with MSIG Insurance Malaysia Berhad in a strategic collaboration to further increase its reach. MSIM will continue to provide general insurance services, while Leong will continue to provide life insurance services. Leong is now Malaysia's largest and leading local brand for financial wellness, planning and protection solutions, specialized in life insurance solutions, and is prepared to achieve new horizons for its life insurance business in the next years as a result of the strategic paradigm change. Next is people and business model. First, for the people model, for the CEO, first they will formulating the vision for the company and recommending policy and the strategic direction of the company for approval by the board. Second, they will provide management of the day-to-day operations of the company and acting as the spokesmen of the company. Next is for the business model. First, their key partners are investment partnership with Leong Bank and shareholder. Next, for their key activities are savings, medical mortgage financing, accident and death, and for key resources are staff and network. The value proposition is pledged to promote Takaful to everyone as a fair, transparent, and universal instrument for risk management, protection, and investment. For their customer relationships are customer and recommendations, while for customer segments are individual and family and employee and organization. The channels that use our website, call centers, branches, and institutions, and for the cost structure, our website, branches, employee, and services fee. Lastly, the revenue streams are premium on policies and return on investment.
The product we choose from Leong MSIG Takaful Berhad first is iHeritage Protected Plan for life insurance, and second is HLM Takaful iHospital Care for healthcare insurance. HLM Takaful iHeritage Protector is an ordinary Takaful plan which provides increasing coverage for death, additional coverage for accidental death, additional coverage for death during the Hajj and Umrah, as well as ihsan allowance. The account value, which is value of the participant account VA, will be payable at the end of the coverage term if no death claim has been made. HLM Takaful iHospital Care provide daily cash benefit during hospitalization, which helps subsidize your loss of income or medical bills. This plan pays a daily cash allowance upon a hospitalization, and the benefit will be doubled if the admission is due to cancer. The benefit payable shall be limited to 720 days for every confinement. The Syariah contract have 6 in iHeritage Protected Plan, which is Tabaruk means donation from the portion of the contribution that will be allocated to Participant Risk Fund (PRF), which will be used for mutual aid and assistance among the fellow participants. Second is Iltizam Bi'at Tabaruk, means the commitment to make Tabaruk. Third is Mukalah, means essentially an agent-principal relationship where the Takaful operator acts as an agent on behalf of the participant to manage the PRF, and the Takaful operator earns Wakalah fee for the service rendered. Next is Tu'alah, means an agreement in which the participant agrees to reward the Takaful operator for its achievement or good performance in managing the PRF that leads to surplus of the fund. Fifth is Court means an interest-free loan provided by the Takaful operator in the event of a deficit in the PRF. Next is Mudarabah means a contract between participant and Takaful operator whereby participant provide the contribution to manage by Takaful operator for investment purpose. Any investment profit from the PA investment is to be shared between participant and Takaful operator in the ratio of 19 and 10. In the event of investment loss, the loss will be borne by the participant provided that such losses are not due to the Takaful operator misconduct, the ID or negligence, taksir, or breach of specific terms, mukhalafah asyurut. Next, Leong MSIG Takaful Berhad is the corporate governance, the process and structure used to direct and manage the business and affairs of the company towards enhancing business prosperity and corporate accountability with the ultimate objective of realizing long-term shareholder value while taking into account the interests of other stakeholders. The Board of Directors also review the manner in which the BNM policy document on corporate governance, which is BNM CG policy, is applied in the group. The board assumes responsibility for effective stewardship and control of the company and has established terms of reference store to assist in the discharge of this responsibility.
So now we can see for the statement of income for the financial year ended 30 June 2019, there are Wakalah expenses, supply sharing with Takaful operator, management expenses, change to expenses liability, other operating expenses, other expenses, and the last one, we can see the net profit for the financial year for 30 June 2019 for Takaful operator, which is 4,018, and for the 30 and for the company 4,018 also, and compared to 30 June 2018, which is for the company and the Takaful operator, the net profit, which is 18,191 million. So for earning per share, we can see that for this year is declined because for compared to previous year, the earning per share is 8.19, and for this year is declined to 4.02. The statement of income for the financial year ended 30 June 2020. As usual, there are local expenses, service sharing with Takaful operator, and fee and commission expenses, management expenses, just to expense liability, other operating expenses, and other expenses, profit before tax and zakat, tax expenses attribute to the participant, profit before taxation, and to attribute to the Takaful operator, taxation, zakat, and we can also see the profit after zakat, profit or loss after zakat, and the most important part, which is the net profit for the financial year. We can see for this year the net profit which is increased from the previous year, where the previous is only the company get profit 4,018 million, which is for this year 2020 the profit that the company earned 12,941 million. So they have increased a lot for this year, and for earning per share also increased compared to the previous year. The earning per share, which is 2.15 cent per share, which is increased for this year from 2.15 cent per share to 6.47 cent per share. So we can see for this year, this company increased a lot in their profit. So for the statement of financial income for the financial year ended 30 June 2021, we can see they have also wakala expenses, supply sharing with Takaful operator, fees and commission expenses, management expenses, change to expenses liability, other operating expenses, also profit before tax and taxation, zakat and taxation, tax expenses attribute to the participant, profit before taxation attribute to the Takaful operator, taxation and zakat. So, and the most important part, which is net profit for the financial year, we can see for this year also the profit also declined, because compared to the previous year, which is 2020, the profit which is 12,941 billion, compared to this year, the profit only 7,449 million. For the earning per share also declined compared to the previous year, which is for the previous year, for earning per share, which is 9.47 cent per share, for this year declined to 3.72 cent per share. So now I will continue with the scope for HA. For Takaful Act 1984 was gazetted for publication on 31st December 1984, and the Act came into force on 1st January 1985 to provide regulation of Takaful businesses in Malaysia and other purpose relating to Takaful operator. The Act has 68 sections and is divided into 4 parts, which is Part 1, Preliminary, Part 2, Conduct of a Takaful business, Part 3, Return, Investigation, Winning up, and Transfer of business, and the last one is Part 4, Miscellaneous and General. So now for IPSA 2013, the IPSA 2013 requires a Takaful operator with a composite license to separate its family Takaful business from its general Takaful business. However, Takaful Act 1984 allowed Takaful operator to carry on both business under the same company. Second one, to set up a financial holding company. The IPSA 2013 required Takaful operator to set up financial holding company, which will be subject to the requirement under IPSA 2013. And the last one is inclusion of the beneficiary. The Takaful Act 1984 seemed to confine the recipient of Takaful benefit to the participant only. If the participant died, then he or she will not receive the Takaful benefit, but his or her beneficiary will receive it. So now we move to the differences between each act, which is Takaful Act and the IPSA 2013. So for current IPSA 2013, it is focused on Sharia compliance and governance in the Islamic financial sectors, and also to allocate more power to Central Bank Malaysia, and to provide for a comprehensive legal framework that is fully consistent with Sharia in all aspects of regulation and supervision, from licensing to the winning out of an institution. And the last one is to promoting financial stability and protect the right and interest of customer of financial services and product based on Sharia compliance. For Takaful Act 1984, this act such a society sold as be deemed to be a Takaful agent. No sole references in this act to a certificate or contract of Takaful apply to any certificate or contract whereby a Takaful is affected with such a society. And the Takaful businesses shall be divided into two classes, which is number one, family solidarity business, which in education to all Takaful business. Number two, general businesses, is to say all Takaful business which is not family solidarity to business. And also references to carrying on Takaful business include the carrying on through an agent or as agent. And the last one is the operation otherwise than of a scheme or arrangement relating to the service particular for office or employment, and having for its object or one of the object to make provision in respect of person serving.
In conclusion, we are of the opinion that the Takaful business in Malaysia will continue to grow from strength to the strength based on the increase in the numbers of Takaful and Takaful companies, development in model utilized in the industry, the growth in the size of Takaful fund, as well as the number of Takaful policies from year to year.